Welcome to this Forex Preview here at XM.com. I'm Christina Marujos, and joining me today is Senior Investment Analyst Marios Hadjikyriacos. We'll be discussing the upcoming European Central Bank meeting. The Eurozone is still grappling with a soaring energy crisis and supply chain disruptions, which of course are causing enormous problems across the region. Do you think the European Central Bank will take all of this into account and maybe reflect on the effects when it meets on Thursday?
Hello, Christina. They'll definitely take that into account. And if anything, I think we're going to see the European Central Bank push back against market pricing for early rate increases. Now, let's explain. Lately, we've seen the markets price in the first ECB rate increase for next year. It's a minor rate increase, just 10 basis points, but still, I think that's a little excessive from the markets. Now, why is the market pricing that in? It comes down to inflation expectations. So lately, we've been seeing European inflation expectations move higher, and usually when that happens, the central bank steps in to bring them back down. You don't want them to go too far high too quickly. The reason I think the ECB is going to be uncomfortable with that is because inflation expectations are not rising because the economy is doing great. They are rising because of the energy shock, what we are seeing lately in oil prices and natural gas prices. So I very much doubt the ECB is going to allow this to pass, and I think that they are going to play down the scenario of raising interest rates. They are going to push back against the market and really signal that most probably rates are not going to rise anytime soon. Now, why would they do that? Exactly because of what you pointed out. The growth outlook is not bright at all. We have the energy shock, we have supply chain disruptions hitting Europe, we have the risk of a slowdown in China also inflicting some collateral damage on Europe because China is the Eurozone's biggest trading partner. And if you look at what the latest PMIs in Europe are saying, businesses are not feeling that optimistic about growth moving forward.
So bearing all of this in mind, how does the longer-term outlook for the euro seem?
Well, if the ECB indeed pushes back against market pricing for an early rate increase, that could deal a minor blow to the euro. We could see the euro trading a little bit lower. And I also think that the overall outlook is pretty dark as well, especially against the US dollar. And the reason is purely because of economic divergence. So if we look at the American economy, it's doing just fine. The PMIs are quite strong lately. The US is also independent on energy, which means this latest oil price shock is going to affect US consumers much less. And on top of everything, Congress is working on another major stimulus package just to power up growth. And in contrast, in Europe, the consumer is probably going to feel the pain from higher electricity bills. We also have the supply disruptions spelling downside risks for manufacturing, and we don't have any impressive government spending in the pipeline either.
Marios, thank you for joining me today, and thank you for watching this Forex Preview on the European Central Bank meeting coming up on Thursday here at XM.com.